To keep yourself updated, subscribe to Indigo Learn and click the bell icon.
Friends, welcome to this final accounts of sole proprietors or sole traders as we call them. In this chapter, we are going to understand about something very interesting, that is the final results. What exactly happened? We spoke about accounting, we spoke about journal entries, ledgers, trial balances, all special adjustments, all that we have done. Now, finally, what's the result? People do want to know, right? So, in this chapter, we will understand how those final results can be prepared and shared with different users of financial statements. Now, let me give you once again a simple example. Let me give you a simple example of the sequence. Say there is a cricket match and the match is just completed. The result of match is the first thing you want to know. So, for example, in the match, India won. So, that is the result of the match. So, the match started at some point of time, ended at some point of time, and in this period, the result is India won. Correct? So, that is the result of the match. Now, if I talk about, say it's a 5-match series, I am asking, so what's the overall position looking like? So, we said, India won 3 matches, Australia won 1 match. So, the overall position is 3 for India, 1 for Australia. But what about this match? In this match, India won. So, basically that is what we said. Now, friends, there are 2 things I want you to understand out of this. The performance in today's game shows that India won. So, this is performance, right? Then, position of the series is 3 for India, 1 for Australia. So, position is, till now in the series, whatever matches have happened, what is the overall position? So, you are talking not just about this match performance, you are talking about cumulatively till now, this is where it stands. So, as at this point, from beginning till now, not just today's match, from beginning till now as we look at it, 3 matches for India, 1 match for Australia. Similarly, if I talk about an individual player's record, say Virat Kohli scored 100 in this match, fine. So, performance of Virat Kohli in this match is he scored 100, fine, keep it aside. Now, I want to know Virat Kohli's performance till date, performance as at this point, performance till date, meaning from the time Virat Kohli made debut in cricket till now, how many centuries he scored, how many runs, how many catches, all of that. So, you want to know the performance till date. So, when I talk about financial position, position is cumulatively what all was achieved, net or cumulatively whatever was achieved is presented in something called as position. So, friends, the match performance of Virat Kohli is the performance. The career record of Virat Kohli, I can say, is the position, okay. Now, why are we talking about all this? Let us bring this into accounts. From 1st April 2019 to 31st March 2020, how did we perform? How did we perform means, did we make money or did we lose money? That is what basically we are talking about. So, what is the financial performance? Did we make money or lose money? That is all I am talking about. That will be prepared and presented using trading and profit and loss account. Of course, trading account you will not use for companies. Trading, both put together you will prepare only in profit and loss account. But for sole proprietors, we prepare a trading account as well as profit and loss account. Okay. Then, so that is basically like match performance. But I want to know career statistics. Till this point in the entire career, this is what we have done. So, we want to know. The next thing is financial position. Position means what? At this point, how does our position or how did we perform in all individual matches put together, not just this match, all individual matches put together, how did we perform? That is what we call as financial position. So, that will be reflected in something called as balance sheet. So, in balance sheet what happens? From starting till now, from starting of business till now, what all did we achieve will be there in financial position, will be called as financial position reflected through balance sheet. So, you will find assets at this point, this is the assets. When I say at this point, net of entire performance which happened from beginning till now, and net of entire performance. So basically, we bought an asset, we sold an asset, we bought an asset, we sold an asset, we bought an asset, we sold an asset. Today, what is the position of asset? So today, what is the position of asset? Considering all these things, we are saying today the position of assets is so much. Similarly, bank position. So we started with some 10 lakhs cash, then we used it for business, again we raised money, we used it for business. All that is fine. Tell me today, what is the closing bank balance? So at this point, what is the bank balance? Like that, in balance sheet, we get to see the financial position of an enterprise. Friends, I hope you are clear about it. So individual performances, if you are assessing, we present that in the specific period. If you are preparing and presenting, that performance will be presented in P&L account. But cumulative of all the performances, net of all the performances at this point, till this point, net of all the performances, if I want, that position will be reflected in something called as balance sheet. So I can say at this point, so in this year, I am just giving one more example because you have to be clear in your head as to what exactly is profit and loss account and what exactly is the balance sheet. I can say in this year, I earned 50 lakh rupees, I spent 20 lakh rupees, and I still have a profit of 30 lakh rupees. Okay, a business can say that, right? So I earned 50 lakhs, I spent 20 lakhs, I have a profit of 30 lakh rupees. Now that's fine. So in this period, that is your performance. But my financial position is because of what all I earned in the past. I may say I have 4 houses, I have 2 cars, I have this, I have that. So this might be a financial position. Did you understand this, friends? So performances in this period, earned, spent, net, this much. But when I say financial position, okay, so what investments we have, what fixed deposits we have, what loans we have, all these we will take into consideration and say, at this point, this is my financial position. Friends, we will understand how this works in case of sole proprietors. Now, recall, we already learned journal entries, right? So, from journal entries, we did ledger postings. From ledger postings, we arrived at trial balance, right? So, in trial balance, we had different items. What we are now trying to do is, from the trial balance, we will split the trial balance into 2 parts. I am repeating, we will split trial balance into 2 parts. One part will go into P&L account, the other part will go into balance sheet. Friends, I am repeating, the trial balance will split into 2 parts. One part will go into P&L account, the other part will go into balance sheet. Now, when you split trial balance and put one part in P&L, one part in balance sheet, when I say P&L, of course, remember, trading profit and loss account, trading account, profit and loss account. So when I talk about trading account, trading account gives us something called as gross profit. When I prepare profit and loss account gives us something called as net profit. Okay, so we will prepare overall, basically that is for profitability. So overall profitability we see from trading and profit and loss account, and then we will move some items into balance sheet. And the point I want you to understand here is, this is going to be a super easy exercise if you apply your brain. If you try to by heart it, you will never learn it. If you use your common sense, if you understand the principles and deal with this, it is very simple. Friends, listen carefully to some points what I am talking. Say, sales is one number which you have in the trial balance. That sales number, whatever you have in the trial balance, tell me, will that be sales what we made from the beginning of the company or beginning of the shop till now? No. Sales will be in this year what sales we have done. So, that sales, whatever number you see, is basically nominal account. Sir, now I recall. Nominal account concept. So, sales, purchases, all these expenses, these are largely nominal accounts. So, nominal account items generally go into trading profit and loss account. Okay, of course, inventory, how to deal with that, we discussed in that inventory chapter also. So inventory, opening inventory how to consider, closing inventory how to consider, those points also we discussed. So friends, now what we will learn as the first step in this is identifying whether an item in the trial balance will go into trading profit and loss account, into trading account more specifically? Will it go into trading account? Will it go into profit and loss account? Or will it go into balance sheet? Let us start discussing those points, very quickly from now. We will soon understand about whether the items in the trial balance should go into trading account or profit and loss account or balance sheet. Friends, one thing I want you to know is these headings, these names tell you something. You need to understand what they tell. If I talk about trading account, what will be the heading of trading account? Trading account of ABC, some business, for the year ended 31st March 2020, 2021, whatever the year be, okay. So, trading account for the year ended so and so. So, what does it mean? You have trading account for that particular period, So, you exactly know from this to this is the trading account. So, in this period to this period, my sales were so much, my purchases were so much, my gross profit was so much. So, everything you will know regarding that particular period. Similarly, if I talk about profit and loss account, you will find profit and loss account of ABC, that business, for the year ended 31st March 2020, 2021, 25, whatever you want to write. But the point is, you are talking about a specific period. In this period, this is my profit. In this period, this is my loss. When I talk about trading account, in trading account we saw, in this period, this is the result of trading, profit, gross profit or gross loss. So like that, you have for that period. But come to balance sheet, what do you find in balance sheet's heading? Balance sheet of ABC as at or as on, one of the two you can write, as at or as on 31st March 2021 or whatever. So what do you find here? Balance sheet as on this day. I spoke about this logic with you, right? So my financial position as on this day is different. So that is what is coming into balance sheet. So friends, in balance sheet you show the position of assets, liabilities, capital, profits earned till now, etc. Okay. Now friends, now let us list out some items which you see generally in the trial balance and we will figure out where they should appear in the final accounts. See, when I say final accounts, trading, profit and loss, balance sheet, all put together, I will keep referring to them as final accounts. Say you find something like purchases. Where will purchases go? Purchases will go into trading account. Okay. So, amount of purchases will go into trading account. Then, purchase returns also will go into trading account. Purchase returns will be subtracted from purchases. So, purchase returns also will go into trading account. Fine. Purchase returns will be subtracted means purchases will be debited to trading account. Purchase returns, you can say conceptually will be credited to trading account. Then sales will go to trading account. Then any manufacturing cost, etc., that also will go into trading account. Okay. Then come to salary expense, rent expense, those will go into profit and loss account. Generally, these expenses will go into profit and loss. Then what if there is some depreciation on assets, that will go into profit and loss account. Then what if there are some assets like fixed assets, then they will go into balance sheet. Like this, different items you should know whether they go into trading account or profit and loss account or balance sheet. Okay, friends, now what we are going to do is, we will understand the way in which, the logic in which these three accounts play with each other. So, or three statements, trading account, profit and loss account and balance sheet, how will they play with each other? What is the logic? Why do we prepare three statements? Why can't we just make one? So, let us just see how one goes into the other and the other one ultimately goes into the third one. So, let us just look into that logic once and then go into discussing some other adjustments. Say this is the first year, okay? This is the first year of our business starting. We started business with a cash of 100 rupees. Okay, fine. So, cash is an asset. So, if at this point you prepare balance sheet, you will find in the assets, you will find cash of 100 and 100 rupees was brought in as what? It was brought in as capital. So, cash of 100 will appear, capital of 100 will appear. Okay, right. Then, during the year, we used that money and we purchased material, we sold that material. Like this we went on buying, selling every 10-15 days we kept buying, selling items with that. Okay, fine. Finally, when we prepare trading account, what we realized is we sold goods worth let's say 1000 rupees, and we actually purchased only for 800 rupees. We sold goods for 1000 rupees, we purchased only for 800. So that is what has happened in the full year. Okay, fine. Now from trading account, what did we notice? 1000 minus 800, 200 rupees of profit we earned during the period from the trading activity, which we call as gross profit. What do we call it? We call it gross profit. Very good. Then that gross profit will go into profit and loss account. See how it is beautifully going into profit and loss account. So now I will write by gross profit 200 rupees. Then maybe I incurred some salary expenses 50 rupees. Fine. Salary expense 50 rupees. Then rent some 30 rupees. Fine. Rent 30 rupees. That also gone. Like this, some other expenses, miscellaneous expenses 20 more rupees. So all put together 100 rupees of expenses, administrative expenses I call them, means to run our office etc. we require some expenses, so we require money, so all those expenses put together 100. So out of 200 rupees of gross profit, 100 gone in the form of these expenses. So finally we are left with net profit of how much? 100 rupees, net profit of 100 rupees. Now in one sense, the balancing figure of trading account went and sat in the P&L, means trading account, just a big paper got shrunk and went and sat in the profit and loss account as one number. Now in the profit and loss account we had gross profit, we had different expenses, all these things. Finally what did we get? Net profit of 100. That net profit of 100, imagine that paper got crumpled and now that will go and sit where? That will go and sit in the balance sheet as profit. It will go and sit where? In the balance sheet as profit. So trading account became, the big trading account became one small number and went and sat in the profit and loss account. Profit and loss account, that big profit and loss account became one number, it went and sat in the balance sheet. Are you understanding the logic? Now when I look at balance sheet, I find that we had capital of 100. We now got profit of 100 more, and on the asset side we have cash 200. We have cash of 200. We started with 100, now it became 200. So I'm just assuming that entire thing is realized in the form of cash. So cash became 200. Okay, friends, is this example clear? So trading account went into, that big trading account became one number, it went into profit and loss account. Profit and loss account, that big statement became one number, it went into balance sheet. Now this balance sheet, with this balance sheet we complete this year. Now go into the next year. When you go into next year, will trading account of this year come with you? No. Why? It is gone. It went into P&L account. Acha. Will P&L account of this year come with you? No, it will not come. Why? That is also gone. That became one number and went and sat in the balance sheet. So next year you will have only this balance sheet moving, but trading profit loss accounts will complete their identity or will lose their identity after that particular year. They are for that particular period only. Okay friends, right. Now go to the next year. So next year, what is the opening balance sheet looking like? Opening balance sheet means first day of second year. How does the opening balance sheet look like? We have capital 100, profit we earned 100 rupees, and correspondingly we have cash of 200. Fine. Then in the second year we did business, purchased, sold throughout the year we did. And imagine at the end of second year, when you look at trading account, very similar trading account you saw, 1000 rupees of sales, 800 rupees of purchases. Now there is a gross profit of 200. That gross profit of 200, where will it go? It will go into profit and loss account. Okay, fine. By gross profit you wrote, and in the profit and loss account you got this gross profit of 200. When I say gross profit of 200, it means the summary of trading activity went into profit and loss account, and the summary of trading activity is either gross profit or gross loss. So gross profit of 200 went and sat into the trading, into the profit and loss account in the second year. Similar to first year, say we had expenses, different expenses totaling to 100 rupees. Finally, at the end of second year, we got net profit of 100. So, similar to first year, we got net profit of 100 even in the second year. Now, chartered accountants, pay attention. That profit and loss account gave you net profit of 100. That entire paper called profit and loss account will become one number called net profit, and it will go and sit in the balance sheet. Now, how will it sit in the balance sheet? We earned 100 rupees, right? So, in the balance sheet, you already have capital of 100. You have profit of first year 100. Now, you will have profit of second year 100. Okay? So, profit of 100 plus 100. Total profit, how much will you have? 200 you will have as profit. Maybe your assets will appear at 300. Assets will appear at 300. Did you understand, friends? So, basically, trading account is going into profit and loss account. Profit and loss account also at the end of the year is becoming one number and going and sitting in the balance sheet. So, balance sheet at the end of second year, how will that look? Capital 100, profit 200. Profit you earn only 100 rupees in the current year. It is not just about current year profit. It is profit earned till now. Profit earned till now. Acha, position as on this date, as at this point. So, at this point, I find that till now we earned a profit of 200. Maybe 100 in the first year, 100 in the second year. So, like that, it goes on and on and on and on. So, when you look at balance sheet, that is why I said, friends, it is as at this time, but when you talk about profit and loss account, it is profit or loss for that particular period. Now, friends, let's look at what all items appear in the trading account. First, trading account looks similar to a ledger. It's not a ledger, it looks similar to a ledger where you have some items on the debit side and some on the credit side. So, here on debit side, you will have two opening stock, then purchases, then all the direct expenses like direct material, direct labor, factory overheads, manufacturing expenses, or all the expenses which are in the factory, which are incurred in the factory. Just remember this point. Expenses which are relating to factory will come into trading account. Okay. So, all the expenses which are for the purpose of manufacturing, etc., will come into trading account. Now, what if we are not a manufacturer? What if we don't manufacture, we just buy and sell? Okay, when you have to buy, you will incur freight inwards, some transportation inwards you might incur, some material loading, unloading charges you might incur, right? So, all those costs till you say, I purchased, my purchase process is complete. If you are a manufacturer, till the time the goods are ready to move out of factory, all expenses will come into trading account. If you are not a manufacturer, all the costs which you incur till you say, purchase is complete. So, till that point will come into the trading account as expenses. Okay. Then, after all these expenses, then you will have sales. Now, friends, remember, in purchases, cash purchases will come, credit purchases will come. That doesn't matter. Sales, cash sales will come, credit sales will come. That doesn't matter. Now, if you are writing purchases here, I will say if there are any purchase returns, what should happen to purchase returns? Purchase returns should be subtracted because you purchased when returned. You should be subtracted. Purchase returns you may subtract from purchases, or you can write on the credit side. That gives the same effect. Yes or no? Purchase returns you subtract from here, or you write on the credit side. Similarly, sales. Sales, you made some sales and there are some sales returns. Customers return some goods to us. So, you may subtract sales returns here, or you can write it on the debit side. That doesn't matter. So, please understand, friends, purchases will appear on the debit side. Purchase returns, you may subtract from purchases or write them on the credit side. Both are fine. Then, sales will appear on the credit side. Sales returns, you may subtract them from sales or you may write them on the debit side. That doesn't matter. Okay, right. Then, so we discussed about sales. I told you cash sales, credit sales, both will be considered. Sales returns should be subtracted or debited. Then, closing stock also will appear on the credit side. Opening stock appeared on the debit side. Closing stock appears on the credit side. Okay. So, by doing this, we will arrive at something called as gross profit, which is the balancing figure. We will arrive at gross profit, which is the balancing figure. So friends, this is what you need to first understand regarding elements which are appearing in the trading account. Now, there will be some questions like, sir, why are we writing opening stock here? Why are we writing closing stock here? Is this really the correct gross profit? What is the logic going into trading account? I will talk about entire logic of trading account before we say discussion is over. Okay, so first you need to know where to begin. So this is where we begin and say, this is the way in which you present the trading account. Now we'll slowly start talking. As we move further, we'll understand the exact logic which goes into the trading account construction. Friends, we know that in our trial balance there will be some debit amounts and some credit amounts, right? So one simple logic, the items which have debit amounts can go either to the debit of trading account or debit of P&L account, or they will go and sit in the asset side. I am repeating this logic. All the debit amounts in the trial balance will go to one of these three places: trading account debit side, P&L account debit side, or balance sheet into assets. Similarly, all the credit items what you have in the trial balance should go to one of these three places. They should get credited to trading account, or credited to profit and loss account, or they should be credited to, or they should be shown in the balance sheet, capital and liability side. Balance sheet has this capital and liability side. They should be shown under balance sheet, capital and liability side. One of the three. Okay. So this is one simple principle you need to bear in mind. Now you have, say, purchases 1 lakh. Obviously purchases will have debit balance. So purchase, this logic we discussed not here. When we discussed about journal entries, ledgers, we already spoke about that. So purchases has debit balance. Purchases will now go into trading account. After it goes into trading account, tell me, will there be any carry forward of purchases into next year? No. This year account will be closed at the end of this year. So this purchases has to be transferred from purchases account into trading account. So how do I do that? Purchases currently has debit balance. How do I transfer it into trading account? Let us look into the way in which it can be done. Say, look at the purchase ledger. Look at the purchase ledger. You purchased some goods. The journal entry could have been purchases to creditor. Purchases to creditor 100 rupees. Okay, fine. Now, how will it appear in the purchases account? To creditor 100 rupees. Okay, you purchased it on credit basis, you would have written to creditor 100 rupees. Or if you paid cash, you will write to cash 100 rupees. That point is fine. Now, at the end of the year, you will say by what? By trading account. By what? By trading account. So you will close this by transferring to trading account. So trading account, if you are transferring, so what is journal entry? Purchases you are writing by trading account. So journal entry will be trading account debited to purchases account. Trading account debited to purchases account. That is the journal entry what you might, if I just talk journal entry language, it should be trading account debited to purchases. So friends, in the trading account you are writing trading account debited to purchases. That is why this item will go to trading account and you will write it as to purchases whatever 100 rupees amount. So friends, simply that debit balance should go either to the trading account debit side, P&L account debit side, or assets. It should go to assets. One of the three places. Similarly, all the credit items like you may have sales. Sales will have credit balance. It will go to trading account. Similarly, you may have some incomes, interest income, etc. That will go into P&L account on credit side. Similarly, there may be some capital that you brought in or liabilities. All those will go into balance sheet under capital and liability side. If you first understand these principles, you can figure out, if an item is appearing under debit column of trial balance, I know where to move it. You should not do the opposite. If you do the opposite, the problem gets completely messed up. So don't do that. So make sure that you are necessarily focusing on this logic of one of these three places only. How is it moving into? That point you bear in mind.